Hi everyone, this is Mrs. V Chen. Welcome to my Form 5 Accounting lesson number 17. Today is 22nd April 2020. So we will do one DSE question in 2014 for limited company. Alright, so here is the question in 2014. Alright, so even though we have something out of syllabus here, but it doesn't matter, we can adjust the question a little bit and then we can still practice the question. So the first thing is you just cancel this $5 and also share premium is out of syllabus, and then you can move this figure and add to any of the figure here. Let's say we add this to trade payables, so we can still practice this question. And also you go to point number 5 and then you cross out that $5. Okay, so then we can do this question. All right, so to do this question we ignore point A at the moment. We will come back to point A later, and now we go to point B, so which is to prepare for Windy Company Limited, the income statements and the statement of financial position. Okay, so there is another special thing given to us in the trial balance, which is cost of goods sold. So this is the figure for cost of goods sold. Therefore, when you draw up your income statements, so here we have cost of goods sold. Therefore, you don't need to start with the detail. Like say, you don't need to start with opening inventory plus purchases minus closing inventory. You just simply start with the figure given to you in the trial balance. Okay, so since this is a limited company, the income statements for limited company, so therefore all expenses, very often we classify that into 3 categories. So administrative expenses, selling and distribution expenses, and finance costs. And then we stop here. All right, so this is the key answer in this question. So we have net loss. Okay, and then remember the income statements for limited company, we have the extra parts, and the extra parts is the profit and loss appropriation account, but this will be account of workings only. All right, so we start with the net loss from the key answers here. All right, and then in the profit and loss appropriation accounts, we have to minus this, transfer to general reserve, and then dividend. And then in this question, we don't have dividend, you just ignore it. Okay, and finally, this is the figure for retained profits carry forward to be shown in the statement of financial position. So therefore, I can put this 64,200 in the statement of financial position. So here, this is the retained profit, so which is 64,200, like that. And also in the statement of financial position, okay, always show these headings. So assets, non-current assets, current assets are also, you need to show this total assets. All right, so as we change capital to equity and liabilities, so don't forget to show this equity, current liabilities, and the total here is total equity and liabilities. Otherwise, marks will be deducted. Okay, so the first thing this time, we don't start with point 1, so we will go back to point 1 later. Okay, we start with point 2. So here is the information saying depreciation expenses had been omitted. And it is the company's practice to classify depreciation expenses as administrative expenses. So therefore, we need to do adjustments. So let's go back to the trial balance. So therefore, we have this administrative expenses. So this is the amount. And then I go to my income statements. I start with this. So 276,000. And this depreciation being omitted, that means administrative expenses is too small, so I have to add another figure for this depreciation. Okay, so now this is about point number 2. Okay, so next we have point number 3. Goods invoiced at 38,000 were returned by a credit customer, but this had been recorded as returns outwards to a supplier. So obviously, this is about errors, and now we need to do correction of error. So let's do it step by step. So here is the rough work to analyze the situation step by step. So we always start with the correct entry, right? Okay, so the correct entry is about this. So we have goods returned by credit customer. That means it should be related to returns inwards, which is opposite to sales, so we debit return inwards. And the customers being our trade receivable. Okay, and the figure is 38,000 and 38,000. So this would be the correct entry. All right, next. Okay, this had been recorded as returns outwards, so that the wrong entry here wrongly treated as returns outwards, and returns outwards is this. We credit returns outwards, and then we have return outwards from trade payable, and the figure is 23,600 and then 23,600. Okay, and now we can do adjustments to correct the mistake, right? So therefore, for the whole thing here, we have to cancel. And how do we cancel this double entry? So we just reverse it. Okay, we just debit returns outwards by this much, and then credit trade payable. Okay, and then we have to add this double entry, the correct entry being omitted. So I just copy that. Okay, 38,000 and 38,000. Okay, so this will be the double entries to correct the mistake. All right, so therefore, debit returns inwards. I can go to my income statement. For sales, I start with the original figure in the trial balance. Therefore, I have this for sales. Okay, 1,950,000 and minus returns inwards being omitted. Okay, so which is 38,000. So this is how I get the adjustment. All right, so now I have done this. And then credit trade receivable. Therefore, trade receivable is a kind of current assets. So current assets, I start with the original figure for current assets. Trade receivable here. So 381,600. And now credits. That means I have to minus 38 from trade receivable. Okay, so done. And then next, I need to debit returns outwards. And remember, in this question, we don't need to show the detail for cost of goods sold. So if we debit return outwards being included in as cost of goods sold, and this is a debit item. Now I debit simply add, because same, this is debit and we debit, so I just debit means add this to cost of goods sold, and then credit trade payable, and trade payable is a kind of current liabilities. Okay, so I go to trial balance. So this is trade payable. So since we have something out of syllabus, so don't worry about that. Okay, I just adjust the figure in this way. So this is 209,500. So don't worry about this. This is something out of syllabus. Okay, and now credits trade payable. I have to add this much to trade payable. Okay, so that's all about point 3. And also one more thing. So we still have another sentence here in point number 3 saying the goods have been included in the closing inventory. So since the correct treatment should be a kind of returns inwards, so therefore for return inwards, we should include this as part of our closing inventory and now being included. So therefore, we don't have any mistake for this sentence. So therefore, it is all the adjustment related to point number 3. Okay, so next we come to point number 4, which is about the valuation of inventory. So saying that closing inventory, this much was slightly damaged and could be sold at this much. And then you can see the estimated selling price, which is lower than the costs. That means we suffer. So therefore, we have to make some adjustments related to point number 4. And here is the adjustments for closing inventory. And then we always have this sentence saying that inventory should be valued at lower of costs or NRV. And we always choose the lower one because of this prudence concepts, right? So we do some revision on that. Okay, and now given that the cost is 53,240, and then we always need to compare the costs with the net realizable value. So you can see net realizable value is lower than that, so therefore we suffer. Because of prudence concept, we need to recognize the loss immediately. All right, so here is the double entry. And also, slightly damaged should be treated as normal loss because it is not important. So therefore, what is the double entry for recording normal loss? But anyway, we have to decrease inventory. So credit inventory by the change here. And how much is the change? Okay, so let me use calculator to work out the change. So the change is 53,240 minus 33,440. So here is the change. Okay, so since this is normal loss, we are not going to show this separately in the income statement as expenses. So therefore, the loss will be included in costs of goods sold. So 19,800. So you can see, so what happened if we debit cost of goods sold? That means cost of goods sold will be larger and gross profit will be lower. So this is how we do adjustments related to normal loss. Okay, so therefore debit cost of goods sold in order to adjust the inventory valuation, so plus 19,800. Okay, and then credit inventory. So I go to my statement of financial position here. So inventory, the original figure from the trial balance. So this is closing inventory. So I get 253,200 and minus the change, which is 19,800. Okay, now we have point number 5. This is the most important point, and which is new to us for limited company. All right, so which is on 21st December, we have 600,000 number of shares, and then we are going to issue this at $8 each. And then the subscription monies for 750,000 shares were received. All right, so therefore you can see more people, okay, they want to buy shares of our company, even though we are going to issue 600,000 number of ordinary shares. So therefore we call this situation as over subscription. It seems that the shares of our company is very popular. All right, and then for over subscription, we always have these 3 steps. The first thing is we have money received from applicants. So those people who want to buy shares of our company, they have to pay money first so that we receive money. All right, so the first double entry will be we receive money, so debit bank, and then we credit ordinary share applicants. So that means we don't give them any shares yet. So if you look at this credit thing, it is a kind of current liability, because right after receiving money, since we don't give them shares, so we owe these applicants some shares. All right. Okay, but how much we have received it when people applying for buying shares of our company? So it should be 750,000 instead of 600,000. All right, so how much money here we received it should be 750,000 times $8. So therefore we debit bank by this much, 6 million, and then we credit ordinary share applicants. Remember, this is current liability because we don't give them shares yet. So later on, when we give them shares, it must be those successful applicants. And then since we only have this number of shares we issued, so 600,000 times $8. So after issuing shares to those successful applicants, so we have less liability, so that we debit this ordinary share applicants by the same amounts. Okay, so therefore, what is the difference between the number of applicants, 750,000, and the number of ordinary shares? So those will be unsuccessful applicants. So that's step number 3. For those unsuccessful applicants, we have to return back money. We have to return money back to them. Okay, and this is the difference. and then times $8 each, and then we debit ordinary share applicants by this amount. Okay, so what happened if we put all these three double entries together? So here we have the net double entry, so debit bank. However, later on we credit bank. So therefore, how much we debit bank? So that will be the difference between 6 million here minus the money refund to them. So which is 4.8 million. All right, and then you look at this credit ordinary share applicants by this. So that I start with this 6 million. All right, so what happened if you debit ordinary share applicants? So I have to minus this 4.8 million. Right, and later on, we debit this again, so minus this. Right, you see, we get nothing for this ordinary share applicants accounts. And then, so therefore, we have done debit bank, we have done this, done, and then what's left will be credit ordinary share capital. So I write it here, ordinary share capital by this amount. Okay, so you can see this is simply the double entry for issuing shares. So the purpose for issuing shares is to get money. All right, and then we issue 600 number of shares at the price of $8 each, right? So if we have oversubscription, therefore you need to break down the double entry into these three steps for oversubscription. Okay, so however, there is a mistake related to the oversubscription here, saying that the subscription monies for 750,000 shares were received and recorded in the cash at bank and the share issue account. So if you follow all the transactions here, we never use the name called this share issue account. So therefore, this is a wrong account here. We never use this account. All right. So now I have to do correction of error step by step again. So here, this is the wrong double entry. Okay, the firm has debit bank by the money received from applicants, so which is 6 million, and also credit share issue. So let us find some evidence for this share issue. So if you go through the trial balance, you can see the wrong account here, share issue 6 million. So this explains why we have this share issue in the trial balance. Of course, this is error, this is wrong. So therefore, we have to make correction of error. Okay, so after the analysis, now we need to do correction of error. So anyway, for issuing shares, we have to debit bank by this much and credit ordinary share capital, so that you can compare this with bank debit, which is 6 million. However, we only need to debit 4.8 million. So you can see the bank account here is too large, so we credit bank. All right, by the difference. So the difference is 6 million minus 4.8 million. So I have to credit bank by 1.2 million. Okay, and this is wrong, so we have adjusted that credit bank. All right, and share issue is also wrong. We shouldn't have any share issue accounts. All right, so we need to cancel this. So go to the opposite side. So we debit share issue by 6 million. So right after this double entry, so we debit share issue. That means this is credit share issue. Right after that, we have no more share issue. So we have deleted the mistake here for share issue. Okay, and what else we have to do? So this is the correct double entry. Debit bank by 4.8 million and credit ordinary share capital. So therefore, we have to credit ordinary share capital. So now credit ordinary share capital by 4.8 million. All right, so therefore, this is all the adjustments related to the correction of error for over subscription. So once again, let's check debit issue shares, debit share issue, so therefore we have no more this accounts. And then credit bank. Now I need to go to statement of financial position. Okay, so this is cash at bank. I start with the original figure for cash at bank here. So 5,126,400 minus, how much is it? 1.2 million. Right. And then here, credit ordinary share capital, I need to add this to ordinary share capital. So I start with the original one. So this is the original one, 1.5 million, and then plus, so 4.8 million. Okay, now the last point here. So the board of directors resolved to transfer 500,000 to general reserve. So the point is, we cannot pay every dollar we have earned to shareholders as dividend. We must save some money for future use. So therefore, the double entry is debit profit and loss appropriation accounts, and then we credit general reserve to save up money for future use. Okay, so this is the workings for the profit and loss appropriation account transfer to general reserve by this much. Okay, and there is no dividend in this question, so you don't need to worry about that. So therefore, we start with net loss and then more loss. Okay, so this is retained. Okay, I have to change because that is negative. Retained loss for the year instead. All right. Okay, and then credit general reserve, which is part of shareholders fund, also part of equity. So we have general reserve. Now we create 500,000 as general reserve. Okay, in the statement of financial position. All right, so this is a profit and loss appropriation account as working. So after we get this retained loss, we need to add the opening retained profit. So in the trial balance, we have this retained profits here, 566,000 to be added. So therefore, we get this retained profit, 64,200. All right, so this will be the retained profits. Okay. And since we don't have many things in the profit and loss appropriation account, so sometimes to save time, we can skip the workings and then we can work out everything in this way. All right, so we can start with this opening retained profits, which is 566,000. All right, and then we need to transfer this 500 to general reserve, so that we minus this. And then we get a net loss, so that we minus this. Okay, sometimes we can show workings in this way to get this retained profit carry forward to save time instead of draw up the workings in this way. Okay, so since we have finished all the adjustments, and then for the remaining items in the trial balance, you can just post them to the correct places. So therefore, you will get this net sales, cost of goods sold, gross profits, and all the expenses, 3 kinds of expenses, and the net loss. Okay, and then in the statement of financial position, so you have this net book value for equipment, and this is the first part. And don't forget to show this total assets, and also equity and liabilities, and this is equity. All right, and finally we have total equity and liabilities. Don't forget to show this description, otherwise marks will be deducted. Okay, now we go back to point number 1. So we have rubbish bin costing $60 was bought for office use, and then we are going to use it for 5 years. Okay, let's look at the characteristic for this rubbish bin. So which is durable, not for resale, and to be used in the business. So you can see this rubbish bin has exactly the same characteristic of non-current assets like land and building, machinery. But what happens if you put this in the statement of financial position? Then you will have a long list of non-current assets, is that right? But in this situation, according to materiality concept, now this is new to you. Okay, so how should we treat rubbish bin? It should be treated as revenue expenditure. That means we put that in the income statement as a kind of expense, and then instead of capital expenditure. So it should not be a kind of non-current assets because it is not important. Material means important. Material means significant. However, for rubbish bin, it is not material, which is not important, which is not significant. So therefore, rubbish bin should be a kind of revenue expenditure instead of capital expenditure according to materiality concepts. Okay, so therefore the treatments for the rubbish bin have been included in the administrative expenses, which is correct. And here we have to state the accounting principle, all right, to explain whether the accounting treatment for the rubbish bin is proper. So the answer is proper. And here is the explanation. So the accounting concept is materiality concepts. So here, so how do you define materiality? All right, depends on if an item would not make a difference to the user's decision making, that means it is not important, as it is justifiable to write the item off as expense. So if it is not important, you treat that as revenue expenditure, you write off that as expense in the income statement instead of you capitalize in the statement of financial position as a kind of non-current assets. So it is proper to expense the rubbish bin immediately because the value is insignificant. The value is too small. The value is not important. And this is to save time. Okay, and also we don't need to provide any depreciation. All right, so today we have a new accounting concept, which is materiality principle. Okay, and I think that's all about this question in 2014. Thank you for watching my video. I'll see you next time. Bye bye.